Welcome to Voice Daily Finance, the most important news personalized for you every day. Supported by Voice.com.
Today we're sharing three fascinating stories. First up, BlackRock's Chief Investment Officer, Rick Rieder, is interviewing to become the next Federal Reserve Chair, potentially putting a titan from the $9 trillion asset manager in charge of US monetary policy. Then we'll jump across the pond where the UK economy has hit zero growth, but the real story is the £50 billion budget hole facing Chancellor Rachel Reeves. And finally, a wild legal battle is unfolding as Federal Reserve Governor Lisa Cook sues President Trump to block her dismissal, and new documents are flipping the entire story on its head. The most unexpected news in the finance world today has to be this. A top executive from BlackRock, the world's largest asset manager, just interviewed for what may be the most powerful job in finance. The next chair of the Federal Reserve, Rick Rieder, BlackRock's Chief Investment Officer of Global Fixed Income, met with Treasury Secretary Scott Bessent on Friday. Now, this wasn't just a routine job interview. To put this in perspective, BlackRock isn't just big, it's a dominant force in global finance, managing approximately $9 trillion in assets. The firm's fortunes are directly tied to every move the Fed makes. This potential appointment, raises huge questions about the revolving door between Wall Street and Washington, and whether existing ethics rules are strong enough for a candidate from a firm with that much power. Sources say the conversation centered on structural issues and fundamental changes to the way the central bank operates. So the reason this is a big deal is that for decades, the Fed has operated on a dual mandate: keep prices stable and maximize employment, but fundamental changes could mean expanding that mission. We're talking about potentially adding formal responsibilities like ensuring the stability of the entire financial system, or even addressing climate-related financial risks. A major focus for firms like BlackRock. This could completely redefine the purpose of America's central bank. The administration isn't just looking for a new face, it's looking for a new direction for the Fed. Bessent has already interviewed other heavy hitters, including former Fed governors Kevin Warsh and Lawrence Lindsay, signaling a wide-open race for the top spot. This appointment would set up a fascinating philosophical battle, the practitioner versus the professor. Historically, Fed chairs have come from both worlds. You had bankers like Mariner Eccles during the Great Depression, but more recently, academics like Ben Bernanke navigated the 2008 crisis with economic theory. Appointing a market practitioner like Rieder suggests a desire for someone who can navigate complex markets in real time, but it also risks prioritizing short-term market stability over long-term economic strategy. Rieder's potential appointment would be a major departure from precedent, installing a market practitioner at the helm of US monetary policy. And when we say market practitioner in this context, it's important to understand Rieder comes from the world of high-tech, data-driven finance. BlackRock's legendary Aladdin platform is a risk management system that analyzes over $21 trillion in assets. It uses a unified, real-time fire hose of data to see risks before they happen. Imagine bringing that kind of thinking to the Federal Reserve, which traditionally relies on lagging indicators like last month's inflation report. A chair from this world could push the Fed to use real-time data, credit card transactions, mobility data, even satellite imagery to make policy decisions, creating a truly 21st century central bank. The timing couldn't be more critical. While markets are expecting an interest rate cut next week, the administration has been demanding larger cuts to boost the housing market and lower government borrowing costs. The person who takes this chair will inherit immense pressure from day one. After all, this isn't just about who gets the job, it's a battle for the future of the central bank. The list of candidates is now reported to be 11 names long, a mix of past and present Fed officials, Wall Street strategists, and economists. The real question is, what does this high-stakes search signal about the real endgame for the future of the American economy? As a reminder, financial markets are volatile and all information is subject to change. This report is not investment advice. Speaking of economic pressure, the UK economy just slammed on the brakes, reporting exactly zero growth in July. The culprit? The biggest contraction in manufacturing output in a year, which plunged 1.3%. However, if you zoom out, you'll see another layer to this. This isn't just a bad month. A big part of the manufacturing slump is a deeper problem, a failure to keep up with technology. Actually, UK manufacturing has been slow to adopt what's known as Industry 4.0, things like automation, robotics, and AI. For instance, a recent report found that only about 5% of UK manufacturing firms had adopted artificial intelligence, This tech deficit makes it harder for them to compete globally, and it's a major reason the sector is struggling. After expanding just a month earlier, the economic engine has suddenly stalled, putting the government under immense pressure, but that's not the whole picture. While the main engine has stalled, smaller, powerful engines are still firing. Hidden in the data is the fact that the UK's tech sector, especially computer programming, is actually helping to offset these declines. The UK's IT sector now accounts for nearly 10% of the entire nation's GDP, driven by world-leading companies in artificial intelligence and financial technology. So while the big picture looks flat, there's a powerful countercurrent of innovation happening. And this is where the situation takes a more complex turn. The real drama is what comes next. All eyes are on Chancellor Rachel Reeves and the upcoming November budget, because the government is staring down a massive hole in its public finances, with some estimates reaching a jaw-dropping £50 billion. To plug that gap, the Chancellor is now widely expected to raise taxes. This sets up a major conflict. Businesses are already sounding the alarm, warning that tax hikes could crush growth further. Some are already pausing hiring and investment, waiting to see what happens. The ripple effect of this wait-and-see approach is huge. It doesn't just affect hiring for next month. It puts a freeze on long-term, high-risk research and development. Now, that's crucial, because for the UK to compete in the future, it needs to be making big bets right now in fields like quantum computing and biotechnology. When fiscal policy is unstable, companies get scared to make those decade-long investments, which risks the UK falling behind its international rivals. Even a Treasury spokesperson admits the economy feels stuck. And that word stuck is key. Interestingly enough, the UK is a world leader in one specific area that could help get the economy unstuck: financial technology or fintech. I'm talking about something called open banking. This system allows you to securely share your financial data with authorized apps and services, and it's revolutionizing how small businesses get loans and manage their cash flow. The growth is explosive. As of early 2025, there were over 13 million active users, and in a single month, over 31 million payments were made using this tech. And these tools are critical for unlocking productivity in all those other sectors like retail and manufacturing that are feeling the squeeze. The pressure is only getting worse. Borrowing costs just rocketed to a 27-year high, a move the Shadow Chancellor called a damning vote of no confidence that makes painful tax rises all but certain. It's a classic economic collision course. One analyst called this weak start, a sign of things to come, as the Bank of England is now trapped between flagging growth and stubborn inflation. This all begs the question, can you tax your way to prosperity when the engine is already sputtering? From a high-stakes budget battle in the UK, we now turn to a legal and political showdown right at the heart of the US Federal Reserve. A Fed governor is locked in a legal battle with the President of the United States after being accused of mortgage fraud and ordered to be dismissed. The controversy surrounds Fed Governor Lisa Cook. Administration officials, led by Federal Housing Finance Agency Director Bill Pulte, have accused her of illegally claiming 2 different homes in Michigan and Atlanta as her primary residence. The allegations were serious enough to trigger a referral to the Department of Justice, a federal investigation, and a direct order from President Donald Trump for her dismissal. Governor Cook, who remains at the Fed, has responded by suing the president to resist the order. Now, what most people might not grasp is the underlying systemic issue here. This kind of confusion isn't a one-off. It's a huge problem that experts call the single source of truth problem. Essentially, we have all these different systems: the IRS, your county tax assessor, your mortgage lender, federal security clearance databases, and they don't talk to each other. They're what tech people call data silos, because there's no single, unified, authoritative record for a citizen's information. You end up with different official documents telling different stories. It's a system practically designed to create these kinds of disputes. But what really brought this to a head were newly surfaced documents that are flipping the entire narrative. A loan estimate reviewed by Reuters shows that when securing the loan for her Atlanta property, Governor Cook declared it to a lender as a vacation home. This directly contradicts the central claim that she fraudulently reported it as her primary residence. And the evidence doesn't stop there. Property records show Cook never requested a primary residence tax exemption for the Georgia home. A separate federal security clearance form from 2021 also shows she declared the Atlanta property as a second home. So how did all this information come to light? Believe it or not, this is a perfect example of something called OSINT, or open source intelligence, being used as a political weapon. Political operatives are now masters at using digital tools to dig through publicly available records, property databases, tax filings, court documents, and stitch them together to build a narrative. They can create a detailed profile to challenge an official's credibility, sometimes by taking data points out of context. This high-stakes showdown is unfolding against the backdrop of a much larger battle. President Trump's push to exert more control over the Federal Reserve, an independent institution meant to be free of political meddling. The administration has frequently criticised the Fed for its reluctance to cut interest rates, and the stakes here go far beyond one person or one house. This is really about the integrity and independence of the institution that controls our country's monetary policy. Political pressure on the Fed can have massive consequences for the economy, affecting everything from your savings account to the cost of getting a loan. And in a stunning final twist, the official leading the charge against Governor Cook is now facing his own questions. Reports have revealed that FHFA director Bill Pulte's own father and stepmother declared 2 homes in 2 different states as their primary residence, prompting a town in Michigan to remove a tax exemption and charge the couple for back taxes.
That's it for today on Voice Daily Finance. Follow, share, and stay tuned for daily updates coming your way tomorrow.